Hey everyone, it's Tom Gentile. Welcome to Tom's Trading Room, Friday, January 8th. Wow, I'm so glad this week is over. Unbelievable moves that we've had in the markets. Thank you, China. Thanks to China. We've got to give them most of the credit for this downdraft that we've had pretty much the entire week. If you see here, we're looking at the S&P SPY. And two things I want to show you. Obviously, the big thing I want to show you is the last 5 days where we just gapped down. We tried a little bit of a rally on Tuesday, and then just Wednesday, Thursday, Friday, it was just a meltdown. The only thing that's moving up is volatility as traders are nervous, and nobody wants to hold anything into the weekend because they're worried about what could happen, let's call it Sunday, when business continues on the other side of the world. And so we're seeing now that implied volatilities just in the last week alone, week and a half alone, have gone up about 40%. So for every $1 in time premium you would have been able to buy last week, that time premium is now costing you $1.40, all right, for the same amount of time to expiration, all things being relative. So I want to show you a couple of charts here, and then we're going to move into a few other things during this short video. The TLT, or the bond market. Let's just hit the bond market for a moment, because I want to show you something that I think is actually rather interesting. So the bond market, even though the stock market is dropping to new lows since the beginning of December, the bond market is still struggling to confirm by having new highs. All right, so the bond market is sitting in a range, a fairly tight range, although today was a big day for the bond market and for TLT. Here's the thing. You've got a jobs report that came out today, which was pretty strong. And so the Treasury bonds are very confused right now because investors want to take money out of the stock market and put it into bonds because they believe that's where safety is. But at the same time, every time we get another report, most of the reports are telling us that the Fed is likely to continue to raise rates, which would push these types of assets down. All right, so that's where the confusion is that I'm talking about. If you really believe that the market is done, or that the market's going to move sideways from here, or that we're finding support, shorting this or going bearish, anything Treasury, makes a lot of sense. All right, and with TLT, we're talking about puts. All right, because you're talking about, even though this TLT is trading at 123, 123.36 was the close today. The options on these are actually not that bad. I mean, you're looking at volatility that's still in the low teens, 14. So, not huge by absolute reasons, but we are pretty much in the middle in terms of it not being ultra low, but also not being ultra high in terms of implied volatility. The other one I want to show you real quick is gold, GLD. And the Street Tracks Gold Index, this is the ETF for gold. So gold's had its best move up this week since August. All right, that's the kind of moves we've seen. We haven't seen moves like this in a while. We had the big drop-off in the middle of October, and finally it's starting to have some move to the upside because now investors look and they're saying, wow, buy bonds or not buy bonds? Well, maybe they're going to raise rates. Maybe I shouldn't do that. And that's where a lot of interest is getting into the gold market. And even though gold was off a bit today, still had a really good week, as you can see here. Now let's move on. I want to show you something else that we can get in Tom's Tools. And what I'm doing is I'm actually going to what we call our pre-computed rankings. All right, these are the implied volatility rankings. And you go to Rankers to get these off the Options tab. And you'll see that we're ranked by expensive. So if you want to see what's expensive right now, where option traders are telling us that there's a lot of nervousness, Hilton Worldwide, Mondelez International, Anadarko Petroleum, Las Vegas Sands, Devon Energy. What is this? This is basically entertainment and oil, for the most part, has a lot of volatility in it right now. Okay, so if you're looking at any of these, let's just take a look at Las Vegas Sands as an example. And you can see Las Vegas Sands had a drop down. If you're looking at any of these, then you got to say to yourself, if I'm bullish or if I'm bearish, you want to be on the sell side of volatility because the implied volatility is quite high right now. If I go back to stock charts and I type in LVS, Las Vegas Sands, and I go ahead and update, the red line tells the story. Take a look at this. Boom. We pop up And over the last 2 days, we hit 1-year highs in implied option volatility for Las Vegas Sands. So where is the cheapness at? Again, I want to go back to options, rankers, come over to pre-computed IV, and then we're going to switch from expensive to cheap. So I'm going to click on cheap, and where's the cheapness at? Hey, treasuries. Treasuries are cheap, the euro is cheap, and silver, SLV, actually has cheap options. And again, if I go back to my stock charts, and let's just type in SLV, and you'll see relative to where it's been, all right, back here in August of 2015, look where we are now, all right. The range of the high and the low, we're closer to the low than we have been when we were on the high. So gold or silver and potentially gold have some cheap options out there in terms of implied volatility. All right, guys, finally, as I close it up, hey, you know what? Eventually the eyes are going to turn away from China, and we're going to be into earnings season. So I hit my earnings ranker real quick, looked at my top stocks that are priced, I would say most of them are priced over $100 a share. They're not what they used to be, but you see in about 11 days, we're going to start seeing big earnings coming out from companies like United Healthcare, IBM, Netflix, and then, of course, 12 days from now, we start hearing from the likes of Goldman Sachs, FFIV, Apple, 3M, Amgen, etc. So earnings is coming. It's gonna be about a week and a half, and we will be out of this, out of one mess. Hopefully, we're not into another. Hey guys, last thing I want to show you is for those of you that are Tools members, you want to make sure you check out on the homepage. Go over and click on my newsletter. It's got details as well as our trade alerts. And then, of course, if you need any help, then go no farther than our help area, which includes free videos, which are a lot of videos that show you how-tos on how to use this this software, and our traders forum where everybody mixes it up and shows each other what they're doing in the markets. Thanks, guys. Have a great weekend. I'll speak to you soon.